Hey everybody, welcome to another video, and today I'm going to be going over Rocket Lab, particularly whether or not this is a good company to be buying now in 2023. So as you can see on the chart right here, Rocket Lab stock has been pretty volatile over the past 6 months. We've gotten down to about $3.58 or so, up to about $5.48. Right now, more recently, it's down more towards the lower end of that. I'm currently trading at $3.77. Rocket Lab's market cap is at $1.9 billion, and we're just going to take a look real quick at some of these other companies that are similar to Rocket Lab and see exactly how they're comparing over the past 6 months here. So here we have Astra stock. Astra is another small launch company, although they deliver smaller satellites, but they've had a number of failed launches, so this company isn't doing that well right now. But you can see, just switching back and forth between Astra and Rocket Lab, that these charts are very similar to each other. Astra, of course, their market cap is only $100 million right now, which is quite a lot lower than where Rocket Lab is valued. So this is a much smaller company, but despite that, their charts are still very similar to each other. Then if we take a look at Virgin Galactic, again, you can see a fairly similar pattern in the chart right here. That sort of rise there, and then the dip, and then it rises again. All of these companies, they are very similar to each other in this sense, although these companies are all very different in terms of the launch services they provide and just how many successes and failures they've had throughout their history. Now, if you look at the NASDAQ for the same time period, you can see it's somewhat similar, although at the end here, it has continued to rise, whereas all of these space companies, at least these launch service providers, their stocks have been declining. So why exactly would that be? I think the main concern with a lot of these smaller launch companies is that they might not have access to enough funds to keep their business going, especially since we're in a recession right now. If this thing continues to go on for a number of months or even years, perhaps, then this would be very, very bad news for all of these smaller launch companies that don't have access to a ton of funding. Another big piece of news among these launch companies is the bankruptcy of Virgin Orbit. So, at one point in time, Virgin Orbit seemed like a promising company, perhaps, but now they are filing for bankruptcy because they failed to get enough funding to continue operating their business. And this is a theme among all companies at the moment, but it is particularly hurting a lot of these companies that aren't yet profitable, which includes Rocket Lab and Virgin Orbit and Astra and Virgin Galactic. A lot of these smaller launch companies, they aren't profitable, so if they run out of funds during this recession, then, they're screwed. Now moving on to Rocket Lab's financials, I've got the income statement pulled up here, and you can see they had revenues of $211 million for 2022. Their cost of revenues came in pretty close to that at $192 million, but they at least did have a gross profit, which is something that they did not have in previous years. So Rocket Lab's gross margin has definitely been improving over the years, but looking at operating expenses, you can see these have been increasing throughout the years. Of course, there are a number of things that they now have in R&D that they didn't have in the past, such as Neutron. That's probably the major, the leading thing that's in the R&D category here for Rocket Lab. So it's no surprise that R&D is much higher for them at the moment. But then their selling, general, and administrative expenses are also on the rise. Those are approaching $90 million, much higher than any of the years previously. I wouldn't say the growth there is anything too crazy, but some companies do end up growing too fast, and then they end up needing to lay off a bunch of employees and cut back on their growth. Rocket Lab's 2022 operating loss was $135 million. Yes, that is pretty high, but you can see that it is on the decline throughout the years here. Going from $55 million and then going up to 2021, that almost doubled to $102 million. But then, it's tapered off here for 2022 at $135 million. So yes, Rocket Lab's operating loss is still increasing, but it's not increasing as dramatically as it has been in the past. Each year, it's growing less and less. I'm expecting Rocket Lab's revenues to continue increasing over the years, especially once Neutron gets into operation. Of course, it might be many years before that actually happens, though, so I wouldn't count on that as being some sort of source of revenue in the short term. Now, as for Electron, their new US launch site is in operation, so I would expect some of those launches to be giving them much higher revenue, since there are more national security missions probably in that mix from that launch site. There aren't expected to be too many launches from there per year, but it should still contribute towards the revenues. Additionally, their cost of revenues should be improving as well as they continue ramping up production and getting greater manufacturing efficiencies, like greater economies of scale, for example. Another factor is Electron reusability. It does sound like they are shifting away from the helicopter catching method and just shifting over to pulling the boosters out of the ocean and restoring them from there. They're not expecting this transition to ocean recoveries to really be too impactful to their margin expectations of the overall Electron launch business. So Electron reusability should still be on track to lowering their cost of revenues and improving their gross margins. And then for Neutron, once it's in operation, I would expect it to have much better margins than Electron, just because the recovery process is much more streamlined, being a propulsive landing, and they would be able to reuse it many more times than Electron. I believe they're targeting up to 10 times or so, which is comparable to a Falcon 9 today. So I would expect much better margins for Neutron. Now moving on to Rocket Lab's balance sheet, you can see their cash and cash equivalents are much lower than where they were at the end of 2021, but their marketable securities are much higher. You know, they didn't have any at the end of 2021, and now they have almost $230 million there. Accounts receivable, contract assets, inventories, and prepaids and other current assets, all of these are also increasing year over year, although you would rather have these, just be cash just to make it more liquid, but that's all right. Total current assets are at $662.3 million, which is down from last year's $774.8 million. I would certainly keep an eye on the cash and cash equivalents and marketable securities, since this is really what Rocket Lab needs to continue their operations. So if they run out of this, then, they're going to be in a really bad position. Moving down to the non-current assets, you can see property, plant, and equipment has grown quite a lot since the end of 2021, currently at $101.5 million. Rocket Lab has been building a number of new facilities recently, including the one in Virginia for Neutron, so it's no surprise to see this increasing. Intangible assets are also up to almost $80 million. Goodwill has also increased up to $71 million now. This is mostly due to the more recent acquisitions they've made. Operating leases, finance leases, marketable securities that are non-current, restricted cash, all of these have also been increasing. Deferred income tax assets have been decreasing a little bit, and other non-current assets, overall these have been increasing as well. Rocket Lab's total assets are at $989.1 million, which is up a bit from where it was at the end of 2021, which is very good to see. My main concern for Rocket Lab is whether they'll have enough cash to continue their operations as usual without slowing down their growth too much. This is my concern for so many companies right now, but, it also applies to Rocket Lab. Of course, a lot of that cash is going into other assets, like these current marketable securities and the non-current ones, as well as new property, plant, and equipment. So it's not like it's really getting destroyed or anything here. It's just moving around to different places on the balance sheet. But, they really do need some liquidity in order to continue paying salaries and things like that. So it's important for them to continue having a good amount of cash on their balance sheet. Now, briefly looking at the cash flow statement, you can see the net cash used in operating activities was $106.5 million. The net cash used in investing activities was $346 million. But as we saw on the balance sheet, a lot of that has flowed into some of these other categories of assets for them, such as the property, plant, and equipment, some of the acquisitions that they made throughout the year, and especially the marketable securities making up the bulk of those investing activities. Then for financing activities, they only raised $2 million. Of course, interest rates are very high, and their stock isn't in the greatest place right now to be diluting shares, so it's no real surprise that they only raised $2 million from their financing activities. I've got a number of other videos on Rocket Lab, so be sure to check those out, and I'll see all of you in the next video.